radio for a really great future. We're talking real money.
And the things we want to talk about pale in comparison to the things you are going to talk about with us when you call us at 855-935-TALK. 855-935-8255. Give us a call. Because the thing we love the most is answering your questions. 855-935-8255. It's free. It's easy. We're here for almost anything that is FI. If it's money-oriented, we are going to discuss it with you. Give us a call. 855-935-TALK. 855-935-8255. We're here like all the time. We do the show on the weekends, and we have podcasts every day of the week. And, we join a group of investing podcasts in America. We're in the top 100 pretty regularly, but above us are a number of podcasts. Like the number 2 podcast in investing right now is the Bigger Pockets Real Estate podcast, where you talk about investing in real estate. Or the Blondes Building Equity, where you talk about...
I got to put my foot down there.
It's number 4,
look
the
at
Blondes Building Equity.
Look at the...
By the way...
Is that about money or is it about something else?
I went and looked at their video podcast, and neither of them is a real blonde. I was doing research, sir.
Okay,
their roots are like 6 inches long. They're brunettes building equity. Be honest. Then you got Rich Dad, and we never know what he's about, but often it's about real estate. You got the Real Estate Rookie podcast. That would be about real estate. Bigger Pockets, about real estate. So we've got all these shows about investing in real estate. And a lot of people will tell you that it's better to invest in real estate than it is to invest in the stock market, that it's better to invest in gold. Some people are still under the misconception that these investments that really aren't investments are better investments, Tom.
Yeah, George Gallup has been horsing around and did a new poll. He found that, 26% of Americans, 26%, I think that's like 1 out of 4 people, rank gold as the best long-term investment.
Math was his strong suit. 1 in 4.
18% said stocks.
Gold.
14% said real estate.
Really?
But let's.
Okay, wait. How many said? What percent said gold? What was the exact number?
26%.
So I got to do my math. 26 plus 14. That's, oh my gosh, 40% of Americans think either gold or real estate is a better investment than the stock market.
And I find that's laughable in and of itself. We'll try to give you some numbers to. We don't have a horse. Sorry, George Gallup. In this race, we invest where the money's been made. I'm feeling kind of bad. But the real estate. Okay, first of all, residential real estate.
Yes, sir.
Buying a home.
Yes, sir.
Buying a home. Mm-hmm. Even with leverage.
Yes, sir.
Which is what you do.
Yeah. Yes, sir.
That's made a little more. This is coast to coast now. Yeah. Entire America. You don't avoid flyover USA, America. You make about 2% more a year than inflation. It's right around there. That's not from us. That's from the National Mortgage Association. They've looked at the numbers.
So the average inflation over the years has been 3% or something.
3.5.
3.5.
Yeah, 3.5. So you make somewhere around 5.
Okay. All right. Good.
That's not the best investment. You could have made more other places. How about
gold? How about gold?
Gold. Yeah. How about gold?
How's gold done?
What about it? Over the long haul, it's made about what inflation? It's about 3.5%.
It doesn't make over inflation. It has grown on average at about the rate of inflation, with a few weird periods where it made a lot of money because people were speculating on it. Kind of like the
there
meme
are periods
stock
where
thing.
This year it's had a good year again.
Well, we've had a lot of inflation.
That's why people think, I got to be in gold, man. That's where the money. How about savings accounts or CDs? Is that made more or less than stocks? Or
well, I think that it's made more. They made more than gold.
Yeah.
Less than stocks. And a little bit less than real estate.
Yeah, that's about right. But Well, if we get a chance, I'll talk about this very nice letter we got from the investment company saying, yes, real estate continues to be the best place, and here are all the reasons why. No, you're absolutely wrong, and here are the reasons why.
But your calls take precedence at 855-935-TALK. Give us a call.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Welcome back to our show. He talked into the intro again.
Sorry, I'm bad.
You talked into the intro. You did it.
Okay, edit.
But we're live on the radio right now. 855-935-TALK. It's our phone number, 855-935-8255. This is Talking Real Money. I'm Don McDonald. That's Tom Cock. We're talking money with you because we really like to. We do. We like you, and we like to. And we like to with Teresa, too. Hi, Teresa. Welcome to Talking Real Money.
Hi. I like your show.
Thank you. What can we do for you?
I have a question of what you think of my current plan. I'm 65, and I have an IRA and a Roth and a designated brokerage account with Vestry.
With us?
With Vestry, yes.
Vestry, okay. I've heard of them. Yeah.
We like them generally, yes.
Generally, yes. Okay, and what's your question?
Okay, so I'm not going to start withdrawing money until the end of 2025. I'm currently selling my house, and I should have about $240,000 to invest. My question is, I think you just answered it. Should I put it in stocks or real estate?
Well, okay. First of all, thank you for working with us, Teresa, and appreciate
that's us.
The call.
Oh, okay.
That's
now
us.
I knew where I heard the name before.
Very good, very good. Okay, so let's go back.
Yeah.
So the reason that we say stocks, bonds, that kind of thing instead of there's nothing wrong with real estate, but real estate we think should be a lifestyle decision. I live where I live because I like it. It's close to work. I can afford it. I like the house, et cetera, et cetera. But I don't take money out and go invest it in other properties to make a business out of it, unless that's something you want to make a business of, right?
Which is a lot of work.
That's legit, too. It's a lot of work. It's legit. There's no question. But if I was getting money today from the sale of something and I was going to use that...
Hey, Teresa, turn your radio down for me, please.
I'm hearing a little bit of back talk there. If I was using that to finance my retirement, I would put it in the aforementioned stocks, bonds, that kind of thing, because it's liquid. I can get the money and I can spend it.
Plus, when we build a portfolio for our clients, a portion of that money is invested in real estate. Just not individual properties. It's invested in what are called real estate investment trusts that are broadly diversified. You own apartment buildings, you own commercial property, you own malls, you own...
Can we say it? Oh, malls. Okay, I wasn't sure.
Are they still there? Yeah, they're now malls. They're more open air than closed.
Very successful one, a few blocks. Yeah.
Yeah.
Okay, yeah, true.
Yeah, Bellevue Square, very successful one.
Really?
Yeah, you get that diversification. What we believe in is not just stocks versus bonds versus real estate versus gold. We believe in having a portfolio that reflects the global economy generally, with a little bit of tilt to some of the asset classes that have academic evidence, really incredible evidence showing that they should have in the past outperformed. So what we would suggest you do is add it to your account with that company, Vestry or whatever it is.
Was it Vestry?
Yeah. And get the same, add it to it and build that diversification, because if you have an advisor, then that advisor should be helping you develop the proper portfolio diversification for your situation and your future.
Yes, I believe she is. My plan is to rent an apartment. I have no debt, and I just don't want to maintain a house anymore.
Neither do I.
Me neither.
Neither do I. If my wife would let me rent an apartment right now, the dog is so well behaved, I'd be in that darn apartment in a heartbeat. But that ain't going to happen.
I'm stuck at mine because we got the deck now, so
you
I got to have
built a
several
deck.
years on my
But
new
I
deck.
think you're very wise. I don't believe that it is. I just don't think that owning a home has been a great investment. It has been because of the high level of leverage.
Well, and the coasts have done far better. The expectation then would have to be that they wouldn't do as well over the next 20 or 30 years if you revert to the mean, if you believe that those things kind of go up, they go down, et cetera.
Yeah.
Nobody knows the future of that. But I wouldn't buy it for that reason. I would buy it, as I said, because it's where I want to live.
Yeah.
That's why.
Teresa, thank you so much. We appreciate you being with us. Yeah. Thank you. 855-935-TALK is our phone number, 855-935-8255. And Sharon, you are next. Welcome.
Thank you. I have one very naive question, but I haven't been able to figure out the answer. When the news says the Dow is down or the stock market is down 8 points, down from what? It never says what it's down. So one day it'll be down 7 points.
Great question.
The next day it'll be 28.
Yeah.
So down from what?
I love your question. Tom and I both love that.
That's
because
beautiful.
That really is the kind of question that people are asking, but don't know where to get the answer or how to ask it. You asked it perfectly. So, Tom, what's the Dow down from?
Yeah, the Dow is down from the opening. When the market, and by the way, the opening, the trading begins at 6:30 a.m. Pacific time, 9:30 a.m. unless you're on Robinhood.
Technically, it's down, it's up from the close of the previous day.
The close is okay. So wherever it started, so it's down. And this is one of the things that's very confusing to people when you say down 8 points.
Yeah, what does that mean?
What the heck does that mean? Like, because with the Dow, they're taking 30 stocks. They're dividing them, and they come up with it's very meaningless. A better way to look at it, if you really have to look at it, is what percentage that index is down. Number two, frankly, day to day, stocks are only up marginally more days than they're down. So looking at things day to day is really a tragic. We're not picking on you. So that's what it means. It's down from the as Don says, the close or the opening bell.
So let's say,
and
I don't know what the Dow is at because I never look at the Dow. What's the Dow at?
I'd have to look.
I truly never look. I pay no attention. The Dow is at 33,426. So 8 points on the Dow is like not moving at all. It's meaningless.
You got to get United Healthcare to make some major moves so we can get the Dow moving here.
On Friday, the Dow fell 109 points. Yeah. Which means it went down from 33,540 down to 33,426. But that was only, it may sound like a big number. Ooh, down 109, but it's a third of 1%.
Do you know where the Dow was trading 10 years ago too, by the way? Yeah. Go ahead.
I'm sorry? Sharon?
I was going to say, I'm just listening to news reports telling me it's down one day or up the points the next day, and I had no idea what it was down or up from.
And it is as close to being, for most people's lives, it's about as useless a fact as anything you can say on the news. It basically tells you nothing.
Filler.
I mean,
by the way,
it only matters to people who trade.
To give the number, 10 years ago, the Dow was at 18,000.
So it's doubled almost.
It shows you that, and does it feel like that in many ways?
No.
Not really, because you got the huge downturn with COVID.
And there again, just to add to that, as we mentioned in the last podcast, the Dow is only 30 stocks. The stock market, the global stock market, is 10,000 stocks. 855-935-TALK.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Really, it's what we do because we like to and because we want to help you. That's the other thing is there are a lot of people who get really mad at us for taking people to task in this industry.
There's a lot of tasks to be taken.
Yeah, we do get a few people who give us a hard time for fooling around a little bit, but if we didn't fool around a little bit, it would be really boring for us. So I I don't know about you guys, but it'd be boring
Sorry,
for us.
that's not a good excuse, by the way.
It's not. But what we're really here to do, and the whole intent, it really is to help you make better decisions about money. And there are just way too many people helping you make terrible decisions about money. So call us before you do something. 855-935-TALK is our phone number. 855-935-TALK. David, your time. Welcome to the show.
Hey there. Hey, thanks for taking my call. Hey, I've listened to you guys for about 10, 12 months. I like everything you say. Can I just ask you a question? When it comes to ETFs and mutual funds, across the board, there's crap and there's good. Is that a fair assessment?
That is just life, David. There's crap and there's good. Go ahead, Tom.
So I hear what you say to... So that's just one question. Another, as an RIA...
Okay, wait. What is the question? I'm not following.
What's the question?
What is the question?
No.
Yeah, what do you want to know about?
No, the first question was, do you agree that there's junk and good stuff when it comes to ETFs
yes.
and mutual funds?
Oh, okay. Pardon me.
Okay.
Absolutely.
Okay,
100%.
second question.
As an RIA, you talk about fiduciary. What do you do when you're doing a meeting with your client and he has a need for an insurance product, whether it be life, annuity, or long-term care? Because you say you only do investment.
Yep.
Do you give it to someone else?
Yeah, Don's wife sells insurance on Sundays, which is technically the office is closed, so people don't know. Yeah, okay, great question. First of all, let's make sure that people understand the jargon involved in all this.
I got to go get Debbie in case he wants to buy insurance.
Yeah, you get the contract ready. Registered investment advisor.
Right.
Which,
registered
by
with the
its
SEC.
registration, is required to put the interest of the client ahead of the business, the registrant. So it's a very important thing to pay attention to. We've been talking about it for 20 years. So if we have somebody who needs insurance, we refer them to others. We get nothing for that referral. We have vetted people that we know and that we trust, and those people sell the products that we believe in, not index annuities, not variable annuities, not the crap that we know is handed off to people like cotton candy, but products that people really do need and will pay a reasonable price for.
Right. And again, we want to reiterate, we get nothing. No compensation, no perks, nothing in return. We will not send people to somebody who sells indexed annuities. We will not send it to someone who sells high expense, big surrender charge insurance products. But we won't do it ourselves. No, sir. No.
Okay, that was because I hear what you say. I'm in the insurance business, but with the way you guys tell people to invest, it's good. It's really good. You know, I just.
And we believe, by the way, David, we believe in insurance. Tom and I own
a lot of it.
Way too much insurance. We own a lot.
I believe in it. Yeah. Yeah,
because you've got to insure yourself against, for example, dying and leaving your spouse with nothing. You've got to insure against your house being destroyed in a hurricane. Or do you? But what we don't like is when insurance people sell products that aren't good that are better for the agent than the client. And you know they exist.
You don't sound like you're one of those. Yeah, you're not. You don't sound like you're.
Oh, heck yeah, they do.
Good for you.
No,
I'm saying you're not one of those people.
Find the client's need and figure it out.
Yep, we believe in that. So you're the kind of agent that if we knew you, we might very well send people to you. And thank you very much for sending yourself to us. We appreciate the call. And our phone number is 855-935-TALK, 855-935-8255. It is so easy to call. And we will truly try to help you improve your financial future.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Because, well, that's kind of important. And it really is the fuel for your life right now and your future. So give us a call at 855-935-TALK, 855-935-8255, and we will try to make your life better going forward.
The first caller's going to get what do you?
No. I don't know. You can only give stuff away when you're here alone.
Oh, okay. This stuff is going to Bed Bath & Beyond coupons. I didn't know.
Okay.
Them,
well,
right?
those are you got to get rid of those soon because they're becoming pickleball courts right now as we speak.
You don't have. I got shares of SVB too sitting around. I could hand off some.
Oh, Silicon Valley Bank. You actually have if you have the paper shares, those might be worth a little.
Oh yeah. You
don't have paper
start a fire
shares.
or something, or sure. Okay.
Well, you've got a Washington Mutual certificate hanging on your wall.
It's in my office.
It does.
And the reason I have that, I'll say it, because you come in the office, you say, this company, and you launch into this. I've worked there 23 years, and I know da-da-da-da-da-da. And I go, I knew that company for a long time. I knew the CEO. I know the whole thing. I had a lot of friends who worked there. And right up to the end, by the way, they were saying,
we're going to be fine.
And then they weren't. So that's why it has nothing to do with your company. It's the fact that individual firms, they do go away. It happens.
If you've got an individual firm you're looking at, let us tell you what we think of it. It won't take long, and it's easy. 855-935-TALK, 855-935-8255.
That's so inviting.
Give us a call.
So welcoming.
It is. It's inviting and welcoming and helpful and honest and straightforward and trustworthy. And you can call us at 855-935-TALK. You can also call us after hours. The after hour number, same as the...
come on.
I feel like Art Bell.
That's true, you can.
The after hours
west of the Rockies line.
The after hours number is still 855-935-TALK, and that's where this guy came in.
Hey, Tom and John. My financial advisor has recommended a bank called Flourish Bank for a better interest rate. I'm not aware of this bank. Wonder if you could tell me a little bit more about it. Thank you.
Cherish is the word.
He bleeped his...
Wasn't it Cherish?
I don't know. He bleeped himself, kind of, with the bank.
I think he said Cherish Bank. But let's talk about cash in general. It's a great topic because so many of you are moving into money market funds. They've been taking in billions.
There is no Cherish Bank, by the way. There's no Cherish Bank.
Oh, okay. I just like saying that song. Loving Spoonful? No, anyway, so... Association, okay. God, got it. So the thing is about that I hate seeing, by the way, I think this is all it's a commodity. You just go to bankrate.com, look up the best deal, and use that one. There's no reason to do anything else if it's federally insured. What do you care? Get the best deal you can get. And there's a lot of good deals. Money markets, paying in the... I think 4s and even maybe 5, right? I mean, they're paying a lot too. So, but here's what I don't want to see. I don't want to see you moving from one type of investment to cash because cash is now paying 4 or 5%.
That's why a lot of people are doing it.
I know, and that is a timing error. That is not, if you hold a certain amount of cash, get the best deal, or you keep in cash because you're going to buy a house or car or whatever. I'm fine with that. But to say, well, I don't want to be in those bonds anymore. I'm going to move it over to cash because cash is paying 4.5%, 5%. That is truly a mistake. It's a timing of another type. It's not timing in and out of stocks. It's timing in and out of other assets. So I don't recommend that. No.
I looking at the last time I looked, I could find, and that's still the case. Do you know where you can get the highest rates on CDs right now, Tom?
The brokered CDs?
It's not at Bankrate. Bank rates are like in the 4s.
Schwab.
If you have an account with Charles Schwab, you can get brokered CDs from them. And by the way, this is fascinating. We both bank at Bank of America, right? What do you get on your savings?
I don't know because I don't have any savings there.
Well, it pays. Mine's I have about $200 in it. It pays like 0.3%.
How much? Crazy.
But Bank of America has a 1-year CD.
How much?
That you can't get in the bank. This is what's fascinating.
You can only get it through Schwab.
You can get it through Schwab. It's paying 5.15.
For 1 year.
1 year.
What a weird time this is, where the short rates...
It is a very strange time. I mean, right now, if you were to build a CD ladder out 5 years, you would get from 5.2 to 4.5%. An average of...
Okay, so there's nothing wrong with that. But again, that should be with the cash portion of your
Right. That
holdings,
should only be for the money that is supposed to be available and semi-liquid. 855-935-TOM.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
I'm the Don of that announcement. He's the Tom, and we do talk real money, and we try to do it with you a lot, or for you a lot, at 855-935-TALK, 855-935-8255. And Jason, you're up. Welcome to Talking Real Money.
Hey, Jason.
Hey, gentlemen. Thank you for taking my call on this beautiful Saturday. Wanted to ask about Tesla. I'm about 45 years old. I have a number of funds and ETFs, but I have some in Tesla, and I've heard different price targets. I've got 20 shares, and I've heard a lot of different price targets. And from all the indications that I'm getting, and looking at their future roadmap and everything, it seems way undervalued at the current price. I've heard a lot of Kathy Wood and what have you, I think, has a price target of $1,500 or something, in the next 5 to 10 years. So I just kind of wanted to get your thoughts on loading up on Tesla, if that's a good, I know it's a single stock. I know there's risk inherent with that, but I just wanted to kind of get your thoughts.
Would you like to start, or would you like me to, sir?
What about, what about some Rivian or something?
Well, no.
Rivian is in a much worse position.
Yeah, here's the thing about Tesla or any other hot, relatively new. Tesla's relatively new in the marketplace. It really is. While they're doing...
So was Amazon at one point.
No. Good. That's a great point. But there is... Amazon, to compete with Amazon today would be literally impossible. They have built such a presence in a market that they just don't have any realistic competitors. The closest is Walmart, and they're not doing very well with that competition battle. But what you have to look at, and I think that I think Kathy Wood is wrong. I think Kathy Wood just makes stuff up to sell funds. The reality is Tesla's market cap right now is $571 billion.
Give me an equivalent.
Ford Motor Company, a competitor in the electric space and becoming more so.
Yes, they are.
$47 billion.
So 10 times.
What about the first mover advantage and all the advantages that Tesla has in the technology?
Well, but I think that's priced in. Yeah, if I was...
They're not a first mover in electric, by the way. They're not. They're a mover in electric. But I owned an electric car in 2011.
I meant more first mover in terms of the automated technology with self-driving and these kind of aspects.
Oh, whoa, hold on! I got to tell you, their self-driving is if you really get into self-driving and start studying self-driving, their technology is archaic when you compare it with the stuff that GM is doing with Cruise and they're doing with Waymo. That they're holding back technology that is far safer and better than the technology that Tesla have, which relies totally on visual cues. So this could be an interesting battle, and that's all I'm saying. It will be a battle. You cannot for a second. I mean, let's just take two companies in the United States, for example, General Motors and Ford. Put them together, their market cap is $100 billion. Okay? Now add to that Nissan, Toyota, Kia, Hyundai, Volkswagen, Mercedes-Benz. We have Polestar, and I would not buy Tesla.
Well, hold on. I understand, but just would you not? Let me make another comparison. So you look at companies that have a cult following, like Apple, right? Say, for example, and people that buy Apple, Apple is a huge company that have been successful for 30 plus years, whatever it is. I mean, they have a brand. They have a cult following. Tesla has a brand. It's a cult. That's what I'm saying. How are they not like Apple in that respect? Like, people that are Apple diehards are not going to go buy a PC because even if it has better technology, because they're in the brand ecosystem. You know what I mean?
But the numbers are small in comparison for Tesla. Tesla has very, very few when you compare it with somebody like Apple, who is they're in hundreds of millions of homes. I mean, maybe billions of homes. You can't tell me there are Teslas in billions of homes, because there aren't. So they have a loyal group of people. They also have a brilliant CEO. However, the brilliant CEO is prone to make incredible. When you have a cult like that, it's a lot like the cult of Steve Jobs the first time.
Right. Exactly.
And Apple nearly collapsed. Steve Jobs got smarter the second time and said, this ain't all about me. I need other brilliant people around me to make this work. And that's when he started bringing in the Tim Cooks and the Johnny Ives of the world to really just so he was the front guy. To this day, though, Elon Musk and plus he's so scattered. How many companies is this dude running right now? I would never bet on Tesla, but here's the thing. I would never bet on any individual stock. Would you?
I'm waiting. It just took you 10 minutes to get there. No, we don't buy individual stocks. Don likes a great debate. And by the way, for those of you working at home, Elon Musk says you are immoral because you're working from home and other people have to go to work. So factor that into him being the smartest man on the planet. So
you're moral and I'm immoral?
Well, I guess so. Wow, that's saying something.
Bad now. Thanks for the call, Jason. We appreciate it. It was fun. It just fascinates me, though, Tom. You could buy
all of those other companies.
You could buy all of those other companies for less than Tesla.
That's crazy. That's nuts. Wow. Good luck.
Bruce, welcome to Talking Real Money.
Hey, thanks for taking my call. I'm retired and have recently changed my my investment. I was in a hodgepodge of stuff that I got into kind of foolishly, like technology and this and that and the other thing. And I had an intervention from a financial planner who said I should do something like what I've actually done. And I just wanted to see if you guys think it's sensible at all. Pretty much I moved the whole stake into the Vanguard Target Retirement 2025 Fund, which kind of matches what I kind of want my allocation to be vis-a-vis stocks and bonds. It's a little over 50-50. And I just wanted to see if you think that is a sensible move. It's essentially a fund that owns a bunch of index funds.
We know what it owns. We
know the fund well.
But here's the question to you. Just out of curiosity, how much money do you have in that one fund?
In that one fund, about 70% of my stake.
I know, but how much money is that? Just roughly.
That's about $400,000.
Okay. Yeah, so here's the only argument I would have with you're perfectly fine. Is that okay? Yeah, it's okay. But really, when you get to that amount of money, I'd rather see a portfolio that has a little more sophistication to it, that has more smaller companies, more value companies, more international. And then again, as somebody retired, maybe more specific to your needs in terms of return, your ability to take volatility, risk, that kind of thing, more personalization. But in a general sense, there's nothing wrong with that fund. It's a reasonable cost. It's reasonably diversified.
Exactly. You could make it a little better, but as it is, it's pretty darn good, well diversified, and you're on a glide path. So it isn't bad at all. 855-935-TALK is our phone number. We'd love to hear from you.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
During the break, I did a little math, and here's your choice. You can buy Tesla, or for the same value, the same market value, you can buy the rest of the auto industry in the whole world. Which would you buy? Oh, if you want to talk about money and you want to hear us talk about money and how you should invest in a way that will enable you to stop worrying about all the stuff going on in the world, like the debt ceiling and markets crashing and recessions happening and all of this stuff, well, join us for our free class, Keep Calm and Retire Strong, on the 24th. It's just coming up in a few days. You can register at TalkingRealMoney.com. It's absolutely free. It's virtual, and it's only less than an hour. TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?